in the world while the rest of us wait. Your heart set on giving, no matter the strain. Building your legacy through love and rain. Fueling those that fire in your soul. The kind that lets the broken heart. Today, you reach the sky, no one's there. In the hands of just a call away. That you know what the hell were you thinking? Your life and beyond keeps the daylight blinking. Every single question I know is in the sky. Wishing in the storm. The pain never dies. Every time you stay away from the ground, but the heart just is rolling. Your compass is love. Take your kisses, your God. Stars see mine with this love. The dreamer who lights up the door. Say that you reach the sky, no one's there. In your hands, you can fly away. Have to know what the hell were you thinking? Your eyes and the eyes keeps the daylight blinking. Every day's a question I'm so in the sky. Wishing in the storm. The pain never dies. Never dies. Still flying high. Kiss the stars, but never say goodbye. Not even gravity can pull you down. You're the wild, the waves, the clouds. All right, I think that's enough of that. Not quite sure, but it is what it is. Bring that right over to there. Yes, and yes. Get rid of that. Get rid of that. Back to there, and we are ready to roll. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you guys along for the ride for a simple, safe, predictable, consistent 1% per week. Yes, I know nobody gets 1% a week. 1% is over 50% by the end of the year, but here's the thing. Don't knock it if you haven't tried it. How do you know it doesn't work unless you've tried it and failed? And if you tried it and failed, what did you do wrong? It's not that difficult. Created for a 9-year-old. My 9-year-old daughter says to me one day, "Daddy, can you teach me?" So she wanted to learn how to invest in the stock market. So how do you teach a 9-year-old to invest in the stock market? Simple. She's only 9. Safe. Don't want her losing her money. Predictable, consistent, and no way for her to lose. 5 simple criteria that I had to figure out a trading strategy specifically for her. 5 simple rules. We'll be going over these as the evening progresses, but let's just blurt them out right here, right now. Number 1, never buy anything you do not want to hold on to. If you don't know who the stock is, if you don't know what the company does, if you don't want to own it for the rest of your life, just don't buy it. It's actually that simple. If you don't know what they do and you don't know all the financial information, everything to make an educated decision, you shouldn't be buying it. Joe Schmo, thank you there, dude. Rule number 3. Rule number 2. Never sell at a loss. It just defeats the purpose of the game. Why would you play the game with the intention of selling for less than when you paid for it? It makes no sense. Why would you do that? Rule number 3. This is a good one. And every night there's always someone who contradicts it. Rule number 3 is simple. Never, ever invest in a company that is not consistently predictable. Sorry, profitable. I know it's one of those P words. Consistently profitable. Think about it. Stock market's been around for over 400 years. We got 11,319 different companies to choose from. It can't be that difficult to find a company that has at least 2 decades of consistently increasing their profits. There's about 350 of them. Okay. So if there's 350 companies that are consistently profitable year after year after year after year, why aren't you buying them? Why aren't you investing in them? Better than that. All right. Rule number 4, weekly options only. Now, I'm going to say this slowly because a lot of people get this wrong. And I don't know how can you get it wrong because it's plain English. That could be the issue. The name of the show is Dividend Stock Talk. And we'll talk about dividend stocks and investing with those types of companies. The subtitle, Dividend Investing for Weekly Cash Flow. Nothing about weekly dividends. There are no weekly dividends here. Okay, but weekly cash flow. That means I want money making me more money. That's my main purpose of being here, to share information with you good people and hopefully create a video diary for my children, my grandchildren when I'm gone, because they're going to need to know how it's done. The stock market's been around 400 years, so the information's not going to die away once I'm gone. KB, weekly options? Absolutely. I want to get paid on a weekly basis. Every week. Rule number 5. Make sure all the numbers work. Now, as we progress, ask whatever questions you want. Suggest any stocks for you want us to take a look at, or me. It's only me. And then we'll just take a look at it one step at a time. A, B, C, 1, 2, 3. It's very simple. It's a simple strategy created for a 9-year-old little girl. Hopefully, you get it. All right. So let's see who's in the house. Let's say hi. Let's get the ball rolling. All right. First off, 420 Ghost. Dude, I haven't seen you in a while. Nice to see you. Thanks for stopping by. Oh, screen share is paused. What? There we go. That should do it. Let's keep on keeping on. Who's in the house tonight? All right, 420, saw you. We have Alton, Fiza, Ryan, August, John. How's it doing, John? Lugo, T-Money. Nice to see you again, T-Money. Jack Mills, Euterpes. Okay. Shell, Mondo, Sad Wi-Fi Monkey. That's a freaking good name. It's a sad Wi-Fi monkey. Yusa, T-Money, thank you. Ben, Maria F, good evening. Thank you there, Miss Maria. Matt Shoss, Phil, Blurry Face, okay. Shez Fusion, okay. Joe Schmo, James, thank you for this. You're welcome, welcome. Thank you for the flowers there, sir. Mr. Holy Sheets. Holy Sheets, all right. KB, nice to see you. Horizon is being removed from the Dow Jones. Okay. I didn't. Is that Verizon or Horizon? There's a difference between the two. New. Thank you for that. KB, thank you. Y, RTX. There you go. Y wants to take a look at RTX. Okay, let's do it. Why? Because Y wants to know. I don't know. Who's on first? RTX. What? Third base. All right, here we go. Now, anytime you see me doing this, I'm always going to do the same things over and over again, step by step. 1, 2, 3, A, B, C, simple. 1, 2, 3, 4, 5. That's what we're looking for. Chart, 1 year. I always start with the 1 year chart first. I'm looking for 5 things, and it takes 2 to 3 seconds for me to see all 5. Are you ready? High, low. Where was it? Where is it? And where is it going? That's it. Should take you less than 2 to 3 seconds. That's it. Well, not like that. That's more like it. I'll go slower. You ready? high, low, where was it, where is it going? Simple. Next, once it passes that test, then, remember rule 5? Make sure all the numbers work. What am I buying it for? What's the closest strike price? What is that paying? And what does the chart look like? That's basically it. So now let's go to the next phase. So the numbers, 186, the closest strike price is going to be the 187, and that's right at 1%. Now, today is Tuesday. Is it Tuesday? Yeah, it is Tuesday. Which means tomorrow's Wednesday. So we have 3 days left for this week. So we're halfway through the week, so we might not be able to get a full 1% for the rest of this week. So every once in a while, can I move the screen a bit? Yes, it's always this camera. Sorry, Maria. Thank you. Thank you for reminding me, though. I get so much going on. I need to get back on track now. Fuck, I forget where I was. That's funny. All right, Coach. Yeah, I was offline for a while, but I'm back. Hope you're doing well. Yes, I am. Thank you very much. What do we got? More questions. More questions. Yep, we did that one. Bread and butter. Nice to see you again. Oh, we're still on RTX. So as I was saying, always take a look. Where's the stock going? What does it look like? Okay, we got the top here, the bottom here. So you want babaloo up, something like that. So the numbers look okay. So as I was saying, we might not get a full percent this week because there's only 3 days left, but we can look at next week. And if I do next week's numbers, I want to get at least 1.5%. Because the rest of this week and next week, 1.5%. So 1% this week. If I got to push it into next week, I want 1.5. Let's see what we got. RTX. It looks kind of interesting right there. Let's zoom in a little bit. Zoom in. The last 90 days, or the last 3 months. The top, the bottom is. Look at this. Up, down, up, down, up. It is in an upward trend, which is nice. A little bit of a pullback. Just let me go over this side for a second. The bottom being here at 170, she shoots up to 195. That's $25. Well, $25 on a $170 stock is at least 13%. So from here to here, well, yeah, there's a little bit of a pullback. There it is right there. Now she's going back up, following the major trend. So you get the major trend, the minor trend. Okay, so looks like she's going up. Profit taking already took place. We got a new starting point here. Great. What are they paying me? Let's take a look. Let's get rid of this. Gonna need the glasses for this one. There we go. Do I look smarter? I don't feel smarter. All right, so we want to do covered calls first thing. Now, these are all the trading strategies that you can do with options. A whole bunch of them. But we're just going to concentrate on this one because it's one of the simplest and one of the safest. So, yeah, for my 9-year-old daughter, I wanted something simple and safe. So, the covered call. Basically, we're buying a good quality stock first, good quality company first. Then we're selling it with a stock option, a weekly stock option, to give someone else the rights to buy it from me. It's like first right of refusal. You're going to sell that? Great. I want to be first in line. Kind of makes sense, right? You want to sell. I want to be first in line. It's kind of like the same thing. Let's call it a weekly call option. That guy, we'll take a look at that in a minute, all right? Do you ever do cash secured puts? Absolutely. Now, I get questions all the time. Is this the only strategy I do? No, it's not. But it is the only strategy I give away for free. Come on, I'm a nice guy, but I do have to draw the line somewhere. Okay, so let's just concentrate on one doing. It's a simple, safe, predictable strategy that can get you, I got to emphasize some of these words, that can get you 1% every single week. Okay, let's keep on moving. So I want to check covered call, buy the stock, sell the option, see what the numbers look like. Am I walking away with a profit, and how much of a profit am I walking away with? All right, 186, 187, there it is right there. One contract. There it is. And here we go. Get the ball rolling on covered call RTX 26 June. That's this coming Friday. It's only 3 days away. That's it. 3 days. Where do we go? The 187.50 call option. 284 is the profit. 18,000 is my investment. Anytime you want any type of investment where you want to return on your money, return on your time, you need to have some skin in the game. Okay, even a cash secured put, you need to have some money to put on the line saying, hey, this is what I want, this is what I'm looking at. All right. That being said, let's get up that calculator. I'm getting better with where this calculator is. All right, you do that. Oh, crap, there it is right there. Cool. There we go. All right. So the calculator is going to help me figure out what is my rate of return. Remember, I'm looking for 1% a week. So if I'm putting up 18,000, 1% is at least 18 bucks. No, 180 bucks. Yeah. 18,000, 1% is 180 bucks. Well, this order right here, or this particular trade, is giving me 284 bucks. Well, that's more than 1%. Let's do it. Let's do it. All right. 284 is the profit. We're going to divide that by the rate, by the investment that we have, 1.5%. So we're going to say yes to this because I like 1.5%. In RTX, do you like the company? Now, that's a big question. Who do we have here? Finger Bob. Hey, Finger Bob, what's happening? Is that kind of like Higamajiggers or Who's He What's It's? Jigamabob? Is that right? All right. So we're going to save this. Here we go. Give it a minute. Give it a minute. It should pop up. Get rid of that. Get rid of that. Get back to this. Get back to there. Here we go. All right. RTX. What? Try this one more time. One covered call RTX. 26 June 26 is this coming Friday. The 187.50 call option. 284 is the profit. 18,000 in the investment. Check this out. Watch this. Oh, I can't see it. 187. Whoops. 187 is the current price. All right, so we're going to save this one. Come on. Ooh, there we go. Where did everything go? There it is. Holy cow. Whoops. And there we go. 1.5. 1.5. Let's do this. Wednesday. All right. All right. What's next? All righty. Where are we? RTX. We already got that one. Freckle Queen. Nice to see you. Can you adjust the screen again, or is it good? I think it's good. KB wants to take a look at Verizon. Hey, Cornbread, what's happening? Verizon, you say. Let's check it out. VZ. VZ for Verizon. It should take you 2 to 3 seconds to see everything. The top, the bottom, where was it? Where is it? Up, down, up, down, up. All right, that looks pretty good. Let's zoom in a little bit closer. It's the last 90 days. Okay, up, down, up, down, up, down, up. as much as I'd like to say yes, it's not a real. You bought them here, and it's going up. 46.73. What do you like? 46.73. The 47s are going for 34 for this week. So it's not going to make it for this week. Let's see what it looks like next week. And next week would be 2 July. Now, the reason I like weekly options, look at this. 26 June, that's this Friday. 2 July, that's next Friday. 10 July, 2 Fridays away. 17 July, 3 Fridays. 24 July, 4 Fridays. 31 July, 5 Fridays. July has 5 Fridays in it. That's cool. Anyway, so the 47s are going for 58, which is more than 1.5%. Not quite 1.5%, but let's give it a try. Verizon, after all. And you should never buy anything you don't like. So if you don't like Verizon, don't buy it. That's a weird thing to say. You don't like it? Don't buy it. 47, there it is. One covered call. There we go. Here's Johnny. One covered call, Verizon, 2 July, that's next Friday. The 47 call option, the stock's currently at 46.69. So 47 is not that bad. $91 is the profit, 4,600. This is a cheaper stock. So what does the rate of return look like? 91. Okay, remember, take the profit, max profit, 91, divided by the cost of the trade, including commissions and fees, of 4,600. Divided by 4,600 and 9 little guys, and that gives us 1.9%. 1.9 for a week and a half. I'm looking for 1% a week. This is offering 1.9 for a week and a half. Okay. But do you like Verizon? That's always a tough one. You either like it or you don't. You either want it or you don't. The numbers either work or they don't. And there we go, Verizon. Woohoo, right there. One covered call, Verizon VZ, 2 July, that's next Friday. The 47 call option, it's paying $91 per contract. So if you get one contract, great. 2 contracts, even better. What if you get 47 contracts? Or 163? I don't know. Profit, the investment, for 1.9% for a week and a half. It's not that difficult finding these things. You just got to ask yourself, do I like Verizon? 1.9. 1.9. Who do we have? Miss Ed. Oh, missed clothing. Oh, okay. That was a tough one. All right. And what chart do you use, think or swim? Ooh, Cornbread wants to take a look at ASML. What the hell is that, ASML? ASML. It's a no. Sorry, dude. I don't buy it the high. And it's $2,000 a share. What the hell are you thinking? Seriously? Or you just wanted to see my reaction on that one? Anyway. Steve Bano. I'm going to take that as a compliment, Steve. Oh, thank you. All right, next. What do we have next? All right, we looked at Verizon. We looked at RTX. Sweet Dan! Please move your camera. All right, I already moved the camera. Maria, can we move the camera? Yeah, we already did that. Pin to the comment. Thank you. Ooh, Joe Schmo wants to take a look at WMB. You just wanted to see? Smart ass. Right? At least you're contributing, right? Everybody needs a comedian once in a while. All right, so Joe Schmo wants to take a look at WMB. WMB. Was that Williams? Yeah, Williams Company. Ooh, look at that. Nah, you guys should get, if I get excited, you should get excited. You know, I used to tell my mother and my ex-wife, like, if I'm not worried, you shouldn't worry. Make it easy on you. If I worry, you should worry. If I'm not worried, you shouldn't worry. If I get excited about something, well, that could be saying something. But look, your top, you got your bottom. Where was it a year ago? Where is it now? Look at the motion. Sideways, up, down, up, down. That's definitely going up right there. Your top is here, bottom is here. Now she's going back up again. Stocks do the same things over and over and over again. Last 90 days, same thing. The top, the bottom, where was it? Where is it? Look at this. Down, up, down, up, down, up, down, up. That's clear as day. Top, bottom, up. All right, so fine. What's the numbers look like? 75, 79. 75, 79. You should automatically be thinking 76 is the closest one, right there. 115. Not quite 2%, but it is over 1.5%. Then that's what we're looking for 2 weeks. What is it offering me for this week? If I get 1% this week, the 76 is 45 to 80. Maybe. I would feel safer with this one, though. I would. So let's do that one. All right. Let's get out of that. Back to covered calls. Next week, we're looking at the 76s. There it is. One contract, just for comparison, makes the math so much easier. Because if you know what one costs, you can do some simple algebra. If 1 equals this, then 17 times 1 is going to be whatever number that's going to be. So let's take a look. One covered call, WMB, Williams Company. The 2 July 26th, which is next Friday. Can you believe it? Next Friday is July 2nd. You know what that means? That means the year is half over because July 1st is the first day of the third quarter. Nice. All right. The $76 call option, $146 is the profit, $7,400 is the investment. What would be the rate of return? Calculator, come out, wherever you are. 146 divided by 7454, 7454, grand total of, Johnny's always won, 1.9. Wow. Another one, 1.9% for a week and a half. Okay, so if we're doing 1 week, I want 1%. Today's Tuesday, we know that, but the market opens tomorrow morning, and tomorrow morning is Wednesday, which is midweek. So we get half a week rest of this week, and then we get all of next week. So it's a week and a half. So for next week, I want at minimum 1.5%, but this Williams company is offering me almost 2%. So yeah, of course I'm going to save that one. All right. Sweet Dan, you got to take care of these people. If I see this kind of stuff, it's like, oh, come on, don't put this stuff on my page. It's like inconsiderate. Just my opinion, inconsiderate. All right, right there. Hold tight. All right, so let's save this one. 1.9% again. All right, while that's doing that, let's clean up this page. Makes the next one seamless. There we go. All right, there she is, Williams. All righty. One covered call, Williams, WMB, 2 July 26th. That's next Friday. The 76 call option. If I buy it for the current price, whatever the hell it is, $75.79, $75.79, and sell it for $76. This is my profit. This is my investment. Now, remember the investment. Now, when I say I don't like taking losses, I will buy this and I will hold on to it until the day I die and absolutely refuse to sell it for less than what I paid for it. So this money's coming back to me no matter what. Okay, so I own the stock and it's worth $7,400. Until I decide to sell the stock, I will get my $7,400 back. But every week, I can do a covered call against the position that I have. So if I buy the stock, I will own it. That's the price I put in, and I will hold on to it until somebody buys it from me at an agreed upon price by an agreed upon date. That's what a covered call is. An agreed upon price by an agreed upon date. The price, 76. The agreed upon date, 2 July, next Friday. For a contract to be valid, you need 4 things: beginning date, ending date, consideration, and then a meeting of the minds. They call it an agreement. It's like you're making an agreement, I'm making an agreement. I'm agreeing to sell, you're agreeing to buy. You're agreeing to buy on this date for this amount of money. That's the agreement. 4 things: beginning date, ending date, consideration, and then meeting of the mind. That's the technical term. Meeting of the minds. Just an agreement between 2 people. Same thing. All right. But for those of you who want to be technical, look at this. Number 3 already. And we're not even past 10 o'clock yet. 1.9. Nicely done. All right. Next. Thank you, Sweet Den. Yeah, Sweet Den, anytime you see somebody saying, hey, I got this link in my bio, yeah, you need to get rid of those. Poachers. Poachers. Love your stuff, brother. Keep on teaching the good fight. Thank you there, Cornbread. All right. All righty. Happy Tuesday, people. SOXL. Ooh, let's take a look. SOXL. SOXL. No. Who got asked for that one? Yarmella, how you doing today? You're new here. I remember that name. But listen just for a second. Just roughly. Making money in the stock market's not difficult. You buy low, you sell high. I don't buy high and then wait for it to go higher. Yeah, no thank you. So, no. Simple enough, right? No. Next, who do you got? Who do you love? All right. RAs, how you doing? Thank you for that. Joe Schmo, we'll look at that one. Forex Queen Clouds. Okay, a little disturbing. All right, whatever. Scott likes Wally World. So let's take a look at Wally World. WMT. Well, that doesn't look that bad. See, within 2 to 3 seconds, you should be able to say it either yes, no, or maybe. Okay, so the top, the bottom, where was it? Where is it? Up, down, up, down, up. What's going on right there? Let's zoom in a little bit more. But before we zoom in and waste our time on that, let's go to the number. And it's not that difficult to figure it out. You ready? 1% of 119. I'm going to say it slow and see who grabs it really quick. The start price is $119.42. So if I'm looking for 1%, what is that? What is 1% of 119? Okay, 119.42. What's 1% of 119? It's 119. It is. Okay. All right, hold on a second. It boggles my mind how people can't see this sometimes. $119.42. Okay, that's the current stock price. So what is 1% of 119? 119. That's it. You move the decimal point over 2 places. That's it. It's actually that easy. All right, anyway. All right, so we're looking at 119. Okay, the 119 is going for 224. Not quite 2%, but well over 1.5. And take a look. What's going on there? The top bottoms out, retraces. What's going on? I want to get a little closer to get a better view. because we saw the numbers. The numbers are okay. The chart wasn't a definite yes and it wasn't a definite no. So it's kind of like a maybe because we really can't see what's going on right there. So let's zoom in a little tighter. Okay, your last 90 days, last 3 months, the top, the bottom, where was it? Where is it? Look at this. Up, down, up, down. What's going on here? Looks like a reversal, change. That gap is going to fill. Gaps have a tendency to fill. Just remember that line. Gaps have a tendency to fill. That hole right there. The stock is going up like that. A little bit of correction. Maybe it's an earnings things. Who knows? But that little correction right there brought us to the new bottom. Back up, back down. It's only a matter of time before she comes back up and fills that gap. So you got to come up with a definition for the word long term. Because for me, that is a long-term play. Now, for my idea of a long-term play is only 30 days. It's like a month, month and a half, maybe 2 months. That's long-term for me. I'm 62, okay? I'm not looking 20, 30, 40 years of my life. No, I'm looking for a week, 2 weeks, 3 weeks. That's long-term for me. All right, so here's that. That baby is eventually going to fill. This week, next week, the week after? I don't know. But as long as she's either going from here, up to fill in that hole, yeah, I don't mind jumping into that. Walmart is a dividend aristocrat. 25 years, increased profits. That means every single year, higher profits consistently. All right, so let's do Wally World. Wally World. The 119. So why not? 119, there it is. One contract, just so you understand the numbers. There we go. Here we go. One covered call, Wally World, 2 July, that's next Friday, and 119 call option. Look at this. The stock price is 119.20. So now I say this and people give me a hard time about it because they don't really quite understand, but here you go. You ready? Kissable, I love DVN. I do. I'll take a look at it. I will. All right. Some people get upset when I do this because I say I never sell at a loss because I don't. But here's the thing. If I buy it at the current price, 119.20, I sell it for less than what I paid for it. I didn't say I'd sell it at a loss. I said I'd sell it for less than what I paid for it and still walk away with a profit. Let me say it slower. I'm going to buy it, sell it for less than what I paid for it, and still walk away with a profit. We'll see how it works. Ready? Current price, 119.20. This is current price. So if I buy it at 119.20, I sell it at 119 through a covered call. I walk away with a profit, get all my money back. What is my rate of return? Is it 2% or is it close to 2%? Let's find out. Now, it's a week and a half away, so I want at least 1.5%. So to find that out, we take the profit, that's 218. 218, and then we divide it by the cost of the trade, including the commissions and fees, and that's 11,682. Let's find out. 11,682 gives me a grand total of 1.8%. For Walmart, dividend aristocrat, 25 years increased profit. That's a quarter of a century. They could have more than 25 years, but they are a dividend aristocrat, which means they do make at least 25 years increased profit. So, of course, we're going to save this one. 1.8 for Wally World? Yeah. We're going to come up with a theme song for Wally World. Why doesn't Wally World have its own theme song? I don't know. All right, let's clean up this. While that's doing that, we'll do this while that does that, and then we'll do this, and then, wait a minute, do this, then we'll do that, and then everything's back to normal. Wait a minute. Just sliding on over. Move over, cool dog. A hot dog is moving in. She changed the lock on my back door. Now my key don't fit no more. One covered call, Wally World. to July 26, 119 call option. Basically, if I buy it first thing tomorrow morning, I'm going to pay roughly $119.42, roughly. And I'm going to sell it for $119, walk away with this profit, get my money back. Oh, damn it. What was that? 1.5, 1.6, 1.8, wasn't it? 1.8, okay. All right, 1.8. Uh-oh, we got room for one more. One more time if we try. Okay, one more. What do we got? What do we got? What do we got? That was a good one there, Scotty. Wally World looked good. Johnny, can I build 1 million in 10 years investing $2,000 a month? Oh, of course, Johnny. Now, wait a minute. I said you could. Johnny, let's check something out. You ready? Watch this. We're going to go, because I did this earlier. I thought it was cool. Right there we go. There we go. There we go. There we go. All right. All right, Johnny, what we have here. Hold on. Thank you there, sweet Dan. Don't. Uh-oh, where did Johnny go? Uh-oh. All right, right there. So, Johnny, can I build $1 million in 10 years investing $2,000 a month? Okay, so I'm going to apologize for the bright whiteness of the calculator, but what it is, a weekly compound interest calculator. It compounds on a weekly basis, and it allows you to add money on a weekly basis to see how you're doing. So, Johnny, let's start out with $0 and just do $2,000 a month. Okay, so first thing I want to do, initial deposit, we're going to put 0. No, wait a minute. Yeah, let's just put 0. Okay. Now, you want a periodic deposit. Okay? Periodic deposit, you said $2,000. All right, let's put in $2,000. $2,000. We're going to leave the 1% there because that's what I'm showing you, 1% a week. Okay? All right? Now, deposit frequency. You want to deposit $2,000 a month. So we're going to change that from weekly, and we're going to change that to monthly. Okay. Okay. Deposits are at the end of the period, beginning of the period. Let's go to the beginning of the period. Why not? Start of the period. All right. Time frame. Now, you said 10 years. Okay, so we get starting with $0, $2,000 a month, 1% a week. What is it going to look like in 10 years? All right, so we're going to put in 10 years right there. And then compute savings. All right, I came up with 9 million. Johnny, 9,003,169. 9 million. How much did you put in? You put in 260,000. 260,000, Johnny. That's $2,000 a month for 10 years. Okay? 9 million, dude. Okay? Anyway, hope that worked out for you. Play around with it. It's a cool little toy. I mean, I wanted to figure out what would compound interest look on a weekly basis if I can add, a set amount, $5 a week, $20 a week, $100 a week, whatever. All right, Aloha wants to take a look at Siri. Siri. All right. S-I-R-I. So, Johnny, I hope that helped you out a little bit. Ooh, yeah, take a look at Siri, okay? Top, bottom is, look at this, up, down, up, down, up. That's definitely going up. Here's your correction. Here's correction number 1, correction number 2. Now she's going up again, 28.08. The 28s are going for between 9 and 81. Well, yeah, it's definitely in there, but it's not telling me what it is. Okay, we zoom in. Last 90. Ooh, I hate when that happens. I do. Last 90 days, same thing. The top, the bottom was, look at this, up, down, up, down. That's definitely going up. Last 30 days, we're going to see the exact same thing. Okay, 30-day top, 30-day bottom. Now she's going up nicely, 28.08. Look at the top is right here. You get all that space between the high of the year, or the high of the 30-day period, and where we are now. So that's a lot of space. So yeah, the numbers look okay. What are they actually giving me? 28.30 under the 28.50s, and let's see what it looks like. Let's get rid of this. Change that to that. 28.50s, 28s. Safer trade. I like safety. And here we go. 37. Oh, all right. So let's read this, see what it looks like. 1 covered call, Siri. 2 July, that's next Friday. The $28 call option, again, we're doing the same thing. 28.30, and we're going to sell it for less than we paid for it, 28, to walk away with, all right, it's only 37 bucks. Big deal. Not the point. It's not the amount of money that you're getting as a profit. It's the rate of return. And how consistently can you do it? Can you do it every single week? Well, what if you can do 1% every single week? 1% every week is over 50% by the end of the year, if you're okay with that. 37, 27, what's the number look like? Calculator, if you may bless us with your presence. There we go. Profits 37. Investment would be 27.63, comes to a grand total of 1.3%. So here's what you have to ask yourself that question. Because you got 10 days, you have a week and a half. Well, a week and a half should give me 1.5%. This is only offering 1.3% for a week and a half. So do I take it? Do I not take it? It's over 1%. It's Siri. All righty. Let's clean this up. Pack it up, buddy. Going to shut you down. It happened on the strip where the road is wide. 2 fuel sharks standing side by side. You have a high win rate scalping strategy other than options. Thank you. Kissable. I want to take a look at DVN. We'll take a look at DVN next. All right, here we go. One covered call. Siri, get the phone from me. Siri, do this for me. Siri. 2 July, which is next Friday, the $28 call option. 37 is the profit. 27 is the investment for 1.3%. You either like it or you don't. It's easy. So that's like flipping a coin. Heads, I like it. Tails, I don't. All right. 1.3. Wow, that was quick. Last night I found it really challenging to get 5, but tonight, no problem. Let's answer some questions. Questions everywhere. What do we got? Tell me, who do you love? Okay. Thank you. All right, questions. All right, Steve Banno, thank you for that. Happy Tuesday, everyone. SOXL, we did it. How far back are you initially looking? A year. Think about it. I take up the 1-year chart first. I take a look at the 90-day chart. Then I take a look at the 30-day chart. And every once in a while, I'll throw in the seasonality chart just to verify where does the stock normally go this time. That's all. What do we got? Thank you there, Sweet Den. Sweet home Alabama. Okay, we already did Siri. So, Johnny, hope that worked out for you. Suffiso, how you doing today? All right. Maria wants to take a look at Coals, KSS. KSS. Coals. Oh, wait a second. Try it one more time. KSS. No. Who came up? No. Sorry, Maria. Now, Maria, the only reason I'm saying no to Coles is look at this right here. See that top where we are today? And see where we were last week? That's a nice movement right there. That's going to be a killer. Zoom in closer. Okay. So she goes from 1150 to 1850. Do the math in your head. 1150 to 1850 is $7. Well, $7 is not a lot, but $7 on an $11 stock, that is more than 50%. Well, of course there's going to be profit taking, which means this baby's going to come down normally. Spark 481, 481 VC. What the hell, VC? No. Okay, Spark 481. Okay, you're relatively new here because I'm good with names. Hold on, let's go back to where it was. Right there. All right, so Spark, you ready? July, August, September, December, January, March. Those are months of the year. So ask yourself, if I'm getting 1 to 2% with each trade, and if I do a monthly, that means I'm getting 12 to 24% for the year. But if I get 1 to 2% every week, that's 50% to 100% by the end of the year. It's a simple math problem. Miss Ann Berg, how you doing today? Okay, so no, Sparks. Sorry. John Voss, K. Oh, what is K? Wait, K is Kellogg's? No, Kellanova. What the hell is Kellanova is a no. Look at that. No. Sorry, dude. All right, Sweet Dan, we already looked at Verizon, and Verizon didn't look that great. T-Money, Pepsi, T-Money. What do you think? Uh-oh. Could be. What's going on right there? Let's zoom into that, see what it looks like. See what that looks like. Last 90 days. Now, do I really need to point it out, the top, the bottom, the motion? Do I really? Or can you, like, what do you call it? Default. Every time you see that very first thing you want to see, high, low, was, is, where is it going? It takes you 2 to 3 seconds to see that. Bloop. Yeah. Okay. What I want to see, last 90 days. Well, last 90 days kind of points it out. The bottom's here, up, down, that's going back up again. But it's only 1 day up. So I like at least 2 days up before I do that. My guess, July 2nd is a Thursday. Probably because wait a minute, hold on. Yeah, so apparently there's no trading on Friday, the 3rd. So he's right, the July 2nd is a Thursday. So you're right about that. Thank you, Mikas. But that only means, the 4th is Saturday, so that means no work on Friday. What is this, like the second time within a couple of weeks? Didn't we have like a 3-day weekend last weekend? So next weekend, we're going to have another 3-day weekend? I should go somewhere. Jump in the car, just drive somewhere. All right, anyway. So reality, how are you? Freddie one. All right, let's keep on going. Micus, thank you. Scarlet Billionaire, nice to see you back again. You disappeared for a while. It's okay, I understand. SMR. I'm not that important in life. Some people come, go. Some people show up. SMR. Interesting. SMR, there we go. All right, so let's take a gander at SMR for a second. Now, I do have some of them. Okay, here's your top, here's your bottom, here's where it was, here's where it is. Look at this, up, down, then sideways. Basically sideways for quite a while. We're at 1086. What is that stock doing right about now? Last 90 days. Oh, looks like I got interrupted today. Look at that. But look at the pattern there is. Down, up, down, up, down, up, down, up. Now she's coming back down again. So, I have it, but not every not every hand's a loser. All right, thank you. Mr. V Wolf. How do you prioritize the Greeks? What's biggest signal? All right, a couple of things, Mr. Wolf. Are you ready? Wolf. Number one, I don't pay attention to the Greeks. Not for this particular strategy. Now, there are literally dozens and dozens of trading strategies. This one here has got nothing to do with the Greeks whatsoever. Now, you're relatively new here, so you probably don't know that this trading strategy I'm giving to you for free was created for my 9-year-old daughter. When she was 9 years old, she says, Daddy, can you teach me? And one thing I wasn't going to teach her, well, actually, I got a list. I wasn't going to teach her about the Fibonacci. I wasn't going to teach her about the RSI or the MACD or the moving averages. Definitely wasn't going to teach her about the Greeks. And even worse, have you seen what the Black-Scholes pricing methodology is for standardized options? Oh, hell no. Simple, safe, predictable, consistent, no way for her to lose in less than 10 minutes a day. That's where the name The 10-Minute Trader came from. If you take a look at how old my website is when I first registered that name, it was over 20 years ago. Okay, my daughter's now 27. She's going to be 28 this year. Holy cow. It's all their mother's fault. if you could always pin it to someone somewhere. It was a lustful afternoon. I think it was September. A lustful afternoon in September. A couple of months later, she says, you know what? Okay. Anyway, so to the Greeks, no. Sorry, not for this strategy. It's a very simple, very easy strategy. You don't really need to include the Greeks. But you can if you want to. Kissable wants to take a look at DVN, Devon Energy. Now, I'm not really fond about the energy of the oil companies at this moment in time. Anytime there's turmoil in the news about energy, oil, gas, it's not, in my humble opinion, it's not a time to jump in buying stuff. All right, so here we go. Here's the top, the bottom. Where was it? Where is it? Look at this. Sideways, up, down, up. Definitely a good one if you like this. Last 90 days. Top, bottom. Where was it? Where is it? Look at this. Up, down, up, down, up, down, up, down, up, down, up. That's it. There's no more. Follow the bouncing ball. Follow the bouncing ball. Bouncy, 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 fun, 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 fun. The wonderful thing about Tiggers is I'm the only one. So the bottom is right here. You've heard it over and over and over again. You're going to make money in the stock market, buy low and sell high. You can't get any lower than the low of the 90-day period, the 30-day period, whatever we're looking at. We're looking at the 90-day at the moment, but if we zoom in to the 30-day, same thing. Okay, your top, bottom, now she's shooting up. Great. 43.39, well, you got your choice. The 43s or the 43.50s. Because it's kind of like smack dab in the middle. 43.39. And this is where you have to do just a little bit more extra work. Calculate the 43s, calculate the 43.50s, and then sit back for a second and think to yourself, wait a second, I got an idea. Check this out. You guys are going to love this. Watch this. Okay, this is what it's doing now. This is actually today. This is actually yesterday. Okay, so tomorrow, it's going to keep going up, or is it going to turn? Here's an idea. Let's take a look in history. I'm going to show you the seasonality chart. Seasonality chart is cool beans. All right, let's go this. Standard seasonality, there we go. Now, let me briefly explain to you what the seasonality chart actually is, and then you can decide whether or not you want to go find one. See, now, one thing I love about Thinkorswim, which this is a software, a trading software you can download, it's free, okay, through Charles Schwab, okay, one of the biggest, traders around. All right, so anyway, the blue line represents the movement this year. You got January 1st way over here, you got December 31st. Now, the blue line represents the movement this year. The red line represents movements on average over the last, whatever you set it for. I have it set for 10 years. So this red line is the average movement over the last 10 years. I can easily change it. Check this out right there. Okay, right now it's set for 5 years, 1 day. So let's look at 10 years. 10 years is right there. And that's what 10 years of data looks like. Let me get out of the way so you can see it better. Okay, this is still January 1st, and this is still December 31st. This is where we are today. Look at the average movement over the last 10 years. Now, we can do the last 20 years, do the same thing. $20. So this is the movement for the last 20 years with Devon Energy. Down, up, down, blah, 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 blah. Okay, but this is still the exact same. This hasn't changed because this is this year. This is 20 years of data. So you can set it for whatever you want to. Now, it's not guaranteed, but it gives you an idea of what stocks do. Now, can anybody, I bet you there might be one person who knows something. You ready? Watch this. Do you see that right there? It goes up. Why does it go up right there? On average, 20 years in a row. Devon Energy is an energy company. Now, here's the funny thing about energy companies. When it gets cold, people want to turn on that oil burner or the natural gas heater. Now, we're all going to turn it on at the same time, right around here, late October, early November. We're all going to turn it on at the same time. But the interesting thing about oil and gas is you can buy oil and gas any time of the year. So buying is not the issue at first. What is the issue is the refill. Think about it for a second. If you fill up your oil tanks, let's say in April, where's the low of the year? Okay, let's say you fill up your tanks in August or September when it comes down a little bit. You're going to turn it on October, November, okay? And then you got November, December, January, February. What happens in February and March? Okay, you can buy anytime you want, but when you turn on November, by the time March comes, you're out of fuel and you need to refuel. So everybody's refueling at the same time. What happens in March? It goes up because everybody refills their oil tanks late February, early March. Now, they don't fill them. They can fill them anytime they want. But as soon as they turn it on and the oil starts disappearing, okay, in March, everyone starts to refill. That's why oil stocks and gas stocks have a tendency to go up the first week of March and April. That's what's called seasonality. How are stocks affected? Winter, spring, summer, fall, New Year's, Easter, 4th of July, Labor Day, Memorial Day, Christmas, Thanksgiving. Does the stock directly relate its price increase or decrease somewhere within the year on a predictable basis? Well, Devon Energy, predictably, right there, in the end of March. Mid-March, beginning of April, goes up. I'll give you another example. Hershey stock, HSY. You'll love this one. You're going to take one look at it and say, oh, yeah, that makes sense. Well, that don't look good for shit, does it? But Hershey stock usually goes up first and second week of February. Let's go back a little bit. Let's do this one. 10 years. There we go. Okay. Right in February. Beginning of February has a tendency to go up. Who knows why it goes up in February? It's not a huge up, but it goes up in February. Year after year after year after year. You know why? Valentine's Day. Valentine's Day is in February. What comes after Valentine's Day? Easter. So yeah, that's the time when Hershey stock has a tendency to go up, right in February and March. Okay, so what else do we got? We did that one, took care of them. Thank you there, Sweet Dan. La 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 la. Mr. Bill, how long do you stay with a stock? Okay, Mr. Bill, I will get rid of a stock as soon as it hits my target price. If it's 2 or 3 days, I don't care. Okay, so I'm not looking to get married. Basically, that means it's like I don't want to hold anything for the rest of my life. 10 years. Oh, no, I don't want that. I want back to normal. No, come on, back to normal. Damn it. Standard. There we go. Okay, so think about it. Do stocks react predictably depending on the time of year? A lot of them do. Google goes down at the beginning of the year. Hershey goes up in the beginning of February. We just saw Devon Energy goes up in March. All right, anyway. QBTS. Mitchie, QBTS. What is that? Mitchie, what is QBTS? What is it? What is it? Ooh, it looks interesting, doesn't it? Look, the top, the bottom, where was it? Where is it? Look at this. Up, down, back up again. That's definitely going back up again. Let's zoom in. Okay, last 90 days. The top, the bottom, look at the motion. Up, down, up. Well, that's easy to see. But do you like QBTS? 2503, the 25 is going for 172. That's 7%. If you like QBTS. Scott King, actually. Thank you there, Scott. Gary Host, we looked at DRAM last night. No. How many stocks minimum I'm supposed to have to begin? Hey, Bill, I don't have a number for you. I tell people is don't buy anything until you've paper traded for a while. Okay, don't put any money at risk. Paper trade, it's kind of like playing Monopoly. 4 red houses, 1 green, no, 4 greenhouses, 1 red hotel. Round you go. Buy some real estate, stay out of trouble, that type of thing. Forever forgiven. Quantum computing stocks is good to get in now, but are a long-term hold, not really James's thing. I'm going to agree with you 100%. I'm an old dude. I get no problem admitting it. Okay? I wake up every morning and say, oh yeah, I remember that came from. Needless to say, does the company you're looking at make sense? Is it profitable? Does the strategy seem sound? Buy it for one price, 2503, sell it for 25, pick up 172. Now the 172 is 172 per share. So one contract is $172. Okay, the 100 shares is only $2,500, and you're getting over 5 or 6%. Let's keep on keeping on. The Kaluflu the Libarian, commenting to stay on the dividend stock section of TikTok. All right, thank you, Clue. Sweet Dan, Bill on the T-Star. Okay. Joe Schmo, Colgate Palmolive. If you didn't know, CL, Colgate Palmolive. Dividend King, which means 5 decades. For those who don't know what 5 decades are, that's 10, 20, 30, 40, 50 years of continuously increasing their profits. They've been in business for over 100 years. Why not? Why not? That's a good question. Why not? Januka, how are you today? Nice to see you. Why am I plugged? Here we go. That works. All right. So if you like Colgate Palmolive, look at this. There's the high, the low. Where was it? Where is it? Down, up, down, up. Okay, 91.43. The 91s are going for 145. The 92s are going for 95. So either one of those is going to give you your 1%. Just where do you want to end up on the other side? Do you want to do it just for 1 week? You know, you buy it for this week, you sell it next week, and then you pick another one? What's wrong with that? It's kind of like socks. You wear them, and then tomorrow you wear another pair. What's wrong with that? Couch potato. How are you? Joe Schmo wants to take a look at Mara. M-A-R-A. M-A-R-A. Ooh, what's going on there? Oh, it looks like it's slowed down. Oh, hell no. Now, Joe, I'm saying no for, I'm trying to be nice here. Because look at where the bottom is. Nice run up. From, what's that, 550 up to 16. That's a 200% increase. Right there. From there to there. About a 200% increase. There's going to be profit taking coming sooner or later. I don't want to be involved in that one yet. It's Thomas. United Wholesale Mortgage been giving dividends forever. Then why haven't I ever heard of them, Thomas? David Rail. That's at 12% annual return. Yes, but why would I do 12% annual return? Why wouldn't I go for the 50% or the 100% annual return? All right, what do we have over here? Over here, Casey, more. Are we on the Yahoo chart? Well, we were, not anymore. Okay, what is that? Angamarka. SoFi. We looked at SoFi last night. Ooh. Oh, Bahari. We haven't done Apple in a while. No. Sorry. Cam wants to take a look at Altria. So look at this. Here's your top, your bottom. Look at this. Up, down, up, down. No. Just doesn't look good at the moment for Apple. TSM. Taiwan Semiconductor. TSM. No. Sorry. I don't buy at the high, but you already knew that. You've been here for a while. David Rail, if you could explain what you're actually talking about, it doesn't really make any sense. Hey, 86 is in the house. Steak Boiler, he's using Thinkorswim draw lines. No, I'm not. I'm actually using a Vibe board. Vibe board is it's an interactive whiteboard. Thank you there, Brandon. $1% a week or 52% a year. Yeah, thank you. Brendan, thank you there, Brendan. Yes, Thinkorswim platform on screen. Moderator, thank you. Oh, it's Thomas Marvel. MRVL. MRVL. No. Sorry. Same thing. Way up here. Why do I want to buy it way up here? Why? Doesn't make any sense. Second is Thursday. Thank you there, Miss Ashley. How are you doing, Miss Ashley? Hope you're doing well. Izzy, French Bulldog. Woohoo. Mr. Wolf. What Greeks do you look at to determine the optimal options contract to consider? None. Okay, Mr. Wolf, we talked about this not even 15, 20 minutes ago. Okay, I don't do the Greeks at all for what I'm doing here. Now, the Greeks are important in some trading strategies. This one, it's not important at all. It's a simple strategy. Either makes sense or it doesn't. Ben, what platform are you using? That would be Thinkorswim. Monique Jones, OSCR. No, Monique. Come on, Monique. I don't buy at the high. Monique, think about it. Okay? You like it, fine. Great, no problem. But what's the play? It's a serious question. What is the play? It's at the high of the year, right here. So what are your intentions? Do you think it's going to go higher? We were at 11. Now we're at 30. That's a $21 increase. That's almost 200% from the bottom. What's the play? I mean, you should never look at a stock and say, oh, hey, let's just buy this. What's your reasoning? What's the end game? You really think it can go higher? It can. I mean, it's already almost at a 200% increase. And what is that? 1, 2, 3 months? 200% in 3 months? That's craziness. Okay, what else do we got? Ben, what platform we got down? Theodore, how are you looking a small profit, but it's very chance to lose? Theodore, what we're looking for, now you're relatively new here. I appreciate the question. I really do. The question is, let me say it a little slower for the rest of you. So you're looking, I'm assuming, at a small profit, but it's a very chance to lose. No. What I'm trying to do, Theodore, is I'm trying to stack all the odds and probabilities in my favor. What do I mean? Okay, for that, let's go right to here. All right. So Theodore, first and foremost, I want to create a list of companies that I like. Now, every single week, we do check to see how many new companies they have added. So at this moment in time, Mr. Theodore, there's 11,313 different companies to look at. Half of those are what called dividend stocks. The other half is what called growth stocks. So growth or income, dividend or non-dividend. Okay, we either want the companies that share the profits or the companies that take all the profits and put it back in. So what I'm looking for, only quality companies that have consistently increased their profits, increased their dividend for a minimum of 2 decades. Now, for those who don't know, a dividend is a small portion of the company's profits that they give back to the investors. So as an investor, that's us, we buy, we sell. As if we buy a stock, we are entitled to a portion of the profits. The company's going to either take their profits, give it back to us in a check, shares of stock, or they'll take those profits and they'll put it back into the company. We get nothing. Future growth. So I'm looking for dividend stocks. Specifically, those companies that have consistently increased their profits year after year after year. Now, out of the 11,313 companies as of Sunday, because I don't know if they added some today and yesterday, don't know. Out of all of those, there's only about 350 that have increased their profits year after year after year after year for a minimum of 2 decades. Now, 2 decades is 10, 20 years. So out of 11,313, I'm only looking at 350. That's it. Okay? Now, the Greeks, I don't pay attention to them all. All right? So, Theodore, besides this, let's get rid of this. So, Theodore, we've now taken that list of 11,313, we brought it down to 350. So, we take those 350 companies and we throw them into the calendar. Now, if you didn't know, and I'm sure we all know this, but let me organize it in a way where it makes more sense. You ready? 365 days, 12 months, 52 weeks, 4 quarters, January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. 4 quarters. Each quarter has 13 weeks. 1, 2, 3, all the way up to 13. Then the list starts over again. So you got 4 quarters, 13 weeks per quarter. The first week of the first quarter looks the exact same as the first week of the second quarter. Looks the exact same as the first week of the third quarter, and looks the exact same as the first week of the fourth quarter. It's a repeating, it's like a revolving door, a Rolodex, or merry-go-round, whatever you want to call it. The same companies I'm looking at, McDonald's, another 90 days, I'll look at McDonald's again. Nordson, another 90 days, I'll look at Nordson again. Pepsi, Abelmont, Lennar, Medtronic, General Dynamics. They pay a dividend every 90 days. So why am I going through all of this? Hold on. It's pretty simple right here. Dividend stocks, specifically dividend stocks that are consistently profitable, have a tendency, okay? General Dynamics has a tendency to increase in price the closer it gets to the EX dividend date. Now, the reason why I do dividends, there's 4 dates to remember. First date is the announcement date. Hey, this is how much money we made. This is how you're going to get yours, blah, blah, blah. It's the announcement date. That's all it is. The second date is the most important date. That is represented by this little green dot. Okay, each one of these little green dots represents a company on this particular list that has 25 years of increased profits. So just before the dividend is paid, the stock goes up. Okay? Now, not only that, the trading strategy which we throw on in there is a covered call. Stocks go 3 different directions. They go up, they go nowhere, or they go down. 3. Okay, so a covered call is a very safe strategy. Let me explain. Okay, if I buy General Dynamics at 100, if the stock goes up, I get that profit, I get my money back. If the stock goes absolutely nowhere and stays at 100, I get the profit, and then I get my money back. Sometimes, if the stock goes down just a little bit, I can still get the profit and still get my money back. It's one of the very few trading strategies that gives me a win 2 out of 3 times, regardless of the direction of the stock. And also, I could get in, get out. I could buy it at 100 on Monday, sell it at 100 on Friday, and still walk away with the profit. The stock doesn't have to move at all. The covered call works in the stock option to give me that little bit of an edge. So I try to make all of the attributes, or as many of them as I possibly can, bending in my favor. So if we only use dividend stocks, those companies that are consistently profitable for at least 2 decades, I'm only looking at 350 companies. But you take them, put in the calendar, well, now I'm only looking at 12 for next week. That's it, just 12. It's easy to pick 1 or 2 stocks out of 12. See, every week I only get like 1 or 2 new companies. So looking at 12 is not that difficult. This is 9 or 8, whatever. So if I stack all the odds and probabilities in my favor, if I do a dividend stock just before the dividend is paid, because the stock has a tendency to go up just before the dividend, and then I use a trading strategy where the stock doesn't have to move at all, and 2 out of 3 times, I'm always going to win. And if we only buy it when there's a directional change that is so obvious, it's hard. I love the double negative. You ready? It's hard to not see it. Let's do it again. Okay, take a look at the chart. You got the top, you got the bottom. Where was it? Where is it? Look at this. Down, up, down, up, down, up. The top is here, bottom is here. That is definitely going up. So if I keep stacking all the odds and probabilities in my favor, nothing is foolproof. But as long as everything is going in my favor, why not? It's simple, it's safe, it's predictable, it's consistent, less than 10 minutes a day. And the Greeks have absolutely nothing to do with it. If I buy it for 100 and I sell it for 100, I get my profit, great. I get all my money back. It's a simple, easy, safe strategy created for a 9-year-old little girl. Okay? So, next question. That was a long answer to that question. It really was. Scalp 76, I see you there. What else do we have for questions? Oliver, opinion on SPY tomorrow. It's pretty bearish, but who knows? All right, Oliver, you're new here. I'm going to cut you some slack, but I'm also going to pick on you because SPY is not what I would consider a consistently profitable anything. Okay, let's check it out. Now, I'm not going to look at the chart. Let's put it in the chart because you hit it as nicely. SPY. Ugh. All right, this is going to be a very challenging one. Okay, so Oliver, this is what SPY looks like. Here's your top, here's your bottom, here's where it was, here's where it is. Look at this. Up, down, up, down. Well, that's simplified. Let's zoom in a little tighter and take a look at the last 30 days. All right, so here's your last 30 days. And this makes it even more challenging to see it. The top, the bottom, where was it? Where is it? Up, down, up, down. So she gapped down today, but then again, she gapped up last week. And gaps have a tendency to fill. Okay, the gap up, well, that one filled. Gap down, well, is that going to turn around and fill? Yeah, it probably will. But when? But Oliver, I really don't like SPY. Let me show you why. SPY. I'm going to need the glasses for this one. Sweet Den, how'd this guy get by you? 86, how'd this guy get by? You guys, my two moderators. This guy shouldn't have gotten by. All right, hold on. I feel this is what's happened for DraftKings during football season, blah, 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 blah. Okay, Joe Schmo, hold on tight. Oh, wow. Seasonality chart. Oh, is a seasonality chart on Yahoo Finance? No, it's on Thinkorswim. Mr. Wolf, he keeps it simple. Thank you for that. Opinions on SPY. You ready, Oliver? All right, Oliver, you ready? This is Yahoo Finance. Now, they do have a premium service you can pay for, but I use the free service because I don't need information that's really that valuable. Because I look at end-of-day data to make up my decisions for tomorrow. I don't sit in front of my computer. Hell no. All right, so what I'm looking for here specifically, these are the dividends. Now, we've already talked about a dividend is a portion of the profits the company gives back to the investors. So if I'm going to invest in SPY, I want to see how often have they increased their profits. Okay? And don't give me that crap. It's what do you call it? It's an index. I know it's an index. It goes up, it goes down just like a stock. You buy it, you sell it just like a stock. It has options just like a stock. It gives you dividends just like a stock. But are those dividends, are those profits increasing or decreasing? That's what I want to find out. So remember I said 2 decades? Okay, 2 decades, 20 years. You ready? Let's check this out. So 20 years ago, Oliver, was 2006. Okay? The dividend for SPY in 2006 was 67. So let's see how often it's increased. Are you ready? So, right here, 67. Lower, higher, 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 lower, higher, higher. Hold on. Lower, higher, higher, lower, 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 higher, lower, higher, 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 lower, higher, 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 lower, higher, higher. higher, lower, higher, 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 lower, higher. It's not consistently profitable at all. It goes up, it goes down. It goes up, it goes down. If it's not consistently profitable, if they're not making more money every single year, how do we know if I put my money in it, it's not going to stop? It's going to start losing money, or it's not. No, I want to show you something. Watch this. GPC. Okay, look at GPC for a second. Okay, Genuine Parts. Whoops, Genuine Parts Corporation. Okay, let's go 20 years ago. 2006. Are you ready? Oliver, are you ready? This, for those you who don't know, this is what consistent profitability should look like. Now, this is 2006. Okay? 33, 36, 39, 40, 41. 45, 49, 53, 57, 61, 65, 67, 72, 76, 79, 81, 89, 95, $1, 103, 106. Now, Oliver, every single year, this company, for the last 6 decades, that's 10, 20, 30, 40, 50, 60, they've increased their profits every single year. SPY has not. Now, you might be looking for something different than I'm looking for. I'm looking for safety. I'm looking for predictability. I'm looking for profitability. And I'm not looking for big, huge profits. I'm looking for little profits. Because how do you eat an elephant? One bite at a time. How do I make 50% per year? 1% at a time. 1 week at a time. 1 trade at a time. All right. Next. T-Money, thank you. Is the seasonality chart on Yahoo Finance? No, that's on Thinkorswim. What is today's list again? I haven't done that. Thoughts on Micron? We already looked at Micron. It was a no. Phil, RTX. Yep, thank you, WF. All right, thank you, Phil. Thank you. American Airlines, Scarlet Billionaire, American Airlines. Ooh, no. Look at that. Who came out with this one? Scarlet, check this out. 30-day bottom, 30-day top, up, down, up. Yeah, no. Starting to come down today. Today's a lower high than yesterday. So that would be a no for today. Big Robert! What's happening, Big Robert? What else do we have? Good evening, James. Can I apply this strategy in Canada? If you're trading U.S. companies, yeah. I mean, I don't know anything about the Canadian market, so I really couldn't say one way or the other how things work over there. Okay, I write pretty. Good evening to you. Siri, we've already done Siri today, my dear. Scats Pub, AMGN. AMGN. Is that what I think it is? Broadcom. Oh, no, Amgen. Ooh, take a look at that. Now, when I say that, look at this right there. Okay, you should automatically see it. Anytime you look at a chart, the 5 things stick out like a sore thumb. The top, the bottom, where was it? Where is it? What is it doing? Okay, up, down, up, same thing. Okay, but as you're looking at it, this is a section right there. That little tiny section, that's this week and last week and the week before. Well, that's right here, right now. That's 9 months ago. I mean, it's important, but very small bit of importance. Up, down, up, down, up. Well, the most important is what's happening today, what happened yesterday. So let's zoom in, last 30 days, get an idea of where this baby's going. Well, look at it. It's not that hard to see. Up, down, up, down, up. Okay, 347. The 347 is going for 450. That's over 1%. You should be able to get really quick, right to the point. Does the chart look okay? Okay, fine. What are they paying me? 347. The 347 is go for 450. Now, for those of you, if I'm going a little too fast, this screen right here is live right now on YouTube, and it is currently being recorded. At this moment in time, it is 10:50 p.m., 6:23:26. So it is actually live at this moment. So if you're here any other time than 10:50 p.m. Eastern Standard Time on the 23rd day of June, it's recorded. But at this moment, it's actually live. All right, that being said, Xpeng, what the hell is that? XPENG? Hell no. I feel this is what happened to DraftKings during football season. I'm not quite sure if that's good or bad. T-Money wants to take a look at Target and PPG. TGT. Ooh, no. Too close to the high. PPG. Look, top, now she's dropping. Let's zoom in a little closer. You get a better view of that one. Look at the movement from 102 to 124. That's $22. $22 on a $100 stock is 20%. 20% jump. Now she's coming back down again. Okay, Brandon, we already looked at Apple a little while ago. Happy belated Dad's Day. Thank you, Brandon. Riot Beta. Okay, WN Sales, Riot, RIOT. Again, I don't buy at the high. I'm not quite sure why that's a difficult concept to grab. Why would you buy when it's at the high? Do you think you're special that you bought it and it's going to go higher just because you bought it? It doesn't work that way. Numbers don't lie. Where's the bottom? Where's the top? How much has it moved? Is there going to be profit taking? How many other people on the dance floor? Well, this dance floor was Riot, 11,311,000. That's a lot. That's not like 5,000 or 6,000. That's not 50,000. That's 11 million. You're not the only dancer here. Okay? Your bottom is here, 23, jumps up to 30. That's $7. That's a 30% move. Here to here. That's 30%. Now it's coming back down again. Remember, people are all the same. They're greedy. Stock goes up. I want my profits. Take profits, the stocks drop. That's why you see this. Up, down, up, down. That's all stocks do. They don't come to your house and make you dinner. They don't take the dog for a walk, empty the trash, rake the leaves, trim the hedges. They don't. They go up, they go down. That's it. That's all. Joseph Marlat. Okay. Do you mix any closed-end funds? No, why would I? Now, don't get me wrong. Closed-end funds are good for what they are and for who invests in them. I've already told you who I am, what I do. I'm 62. I'm retired. The money that I've earned over my 5 decades of working has to last me the rest of my life, has to give me an income. Because that $589 I'm getting from Social Security just ain't working for me. I mean, it could if I would decide to take my van and go park in the woods and live in the woods. Well, then $589 would do just fine. But I don't live in the woods. I don't intend to. Not the point. The point is my money's got to come from somewhere. I don't have the luxury of being wrong, which means every trade I do, never buy something I don't want to own long term. That's rule number 1. Rule number 2 is never sell at a loss. Rule number 3, make sure the company's profitable. And it's a flip. You're flipping the coin. Heads, I win. Tails, you lose. It's a yes. It's a no. It's high. It's low. It's wet. It's dry. It's hot. It's cold. Left, right, up, down. It's all choices. You either like the company or you don't. It's either going up or it's not. It's either giving you 1% or it's not. The rules are very simple. And the rules from my daughter when she was 9. They're my rules too, with a little bit of twist because I'm a little bit older and I've been trading a little bit longer. Not the point. The point is there's simple rules. Rule 1, never, ever, ever buy anything you do not want to hold on to long term. You don't understand it. You don't know what they do. You don't know what the numbers look like. You don't know if they're profitable. You shouldn't buy it. It's actually that simple. You've heard of Colgate-Palmolive. You've heard of Hormel. You've heard of Home Depot, Lowe's, Bank of America, IBM, AT&T, Verizon, MasterCard, Visa. You've heard of these companies. Okay? Most of them have been consistently profitable for over 2 decades. Why not? And if they're giving you, even if they're giving you 0.5% every week, that's still 26% by the end of the year. And when's the last time you got 26%? From a company that consistently increases their profits and are profitable year after year after year. Do you see where I'm going? Never buy a company that's not consistently profitable. Well, that works. And are they consistently increasing their profits year after year after year? Well, of course. Why not? And then do a simple, safe trading strategy. So 2 out of 3 go up, down, or sideways. That's it. So 2 out of 3 ain't bad. That was Meatloaf in was it late 70s or early 80s? I don't know. But 2 out of 3 ain't bad. Okay. Masore, how are you today? All right. Oh, okay. I get that one. Quantum computing, got that one. Thank you. So is that leverage trading? Yeah. What I'm doing on my account is I do have a margin account. So I do make more than 1%. But the trading strategy I'm showing you and the examples I'm showing you are 1%. I do not really trade. I just invest, but trying to learn your method as best I can. Keep showing up. Keep asking questions. The more questions you ask, the better questions you ask, the better you'll do at it. Xpeng is electric cars, AI humanoid robots, and flying cars. Oh, interesting. Got it. Option trading that makes sense. Thank you. What about YouTube? I don't even know if YouTube even has stocks. I don't know. Let's keep on going. We got 2 minutes left. We already looked at Target. KLAC. I have no idea what that is. Are those calendar events earnings? Uh-oh, I missed that one. Dates or... Oh, okay, hold on. That's a good question. I haven't had that question before. So the calendar dates. Mr. Wolf. Okay, we have dividends, earnings, conference calls, stock splits, Econo Day events, futures liquidations, other stuff too. So yeah, if I wanted to look at earnings, I just click on this little tab right here. Now I have the earnings and the dividends. But I don't pay attention to the earnings, me personally, because I've seen positive earnings where stocks go down and I've seen negative earnings where stocks go up. So as a whole, they're not consistent. But dividends are consistent because just before the dividend, most dividend stocks go up in value. What else we got? On BlackRock. I never buy shares. I didn't say that. What stock is that? I don't know. I like dividend stocks. I do too. Miss Kenine, how are you? What percentage of your covered calls are called each week? Half, more, less than half. Thanks, KJ. Brandon, we looked at Ford last night, and plus we had 2 minutes left, so I'm trying to get to as many as these questions I can before I sign out. I like dividend stocks too. Google, hell no. Clack, never heard of it. Gollum, we'll take a look at Chevron tomorrow. Thank you, Brandon. Thank you for that. Thank you. Robert, account management is available. Thank you there, Mr. Steven. Oh, I have to talk to Sweet Den and... Robert wants to take a look at XQQI. Why the hell would you want to look at that thing? All righty. XQQI. We're going to go right to Yahoo Finance. XQQI is probably going to be one of those ones going to like a hell no, not profitable. Oh, yeah. All right. This makes sense. Seriously, look at this. 1, 2, 3, 4, 5. In the last 20 years, this thing, XQQI, paid 5 dividends. No. Ryan, QQQY, hell no, 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 no. QQQY. We're going to run into the exact same thing, Ryan. You ready? So QQQY goes all the way back to 2023. This thing's not even 3 years old yet. Ryan, 3 years old. Now, when I say I want 2 decades, that's 10, 20 years, not 3. Okay? I'm not quite sure what is it with the younger generation. 20 is 20, 3 is a no. But let's take a look at it anyway. QQQY. 3.33, just dropped 10%. The very second dividend is 10% less than the first one. What does that tell you? And then it drops even more. Okay, 3.3. Lower, 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 higher. Lower, lower, higher, lower, lower. No, I'm not even going to bother keeping doing any more of this. Gold, sell now. No, 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 no. No, 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 no. No, 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 no. Okay. All right. I want to be the exit liquidity for billionaires. Why? Maud, please pin my comment. Clayton, what was your comment? I'm looking at all these questions here, Clayton. I haven't seen a question from you. If there's Clayton, if there's certain words you're putting into your comment, they've already been filtered out, which means certain words you cannot post. How is Johnson & Johnson? It's horrible. It really is. J&J. Now, don't get me wrong. Johnson & Johnson is a good company. So why do I say no to Johnson & Johnson? Well, I'm going to show you in a second. Back to where we were. J&J. There we go. All right. Not only is it a nice run up. Look at that. Lovely. Okay. Johnson & Johnson is $239 per share. So we'd be looking at the 240. And the 240 for next week is paying $335. Well, that's good. But most of the time, it's usually not. So let's zoom in. What do you think? Down, up, 239. The 240s go for 345. That's more than 1%. And Johnson & Johnson's over 100 years old. And they have over 5 decades. 5 decades of increased profits. Not 3 years. 5 decades. So, yeah. Sarah, BX. Isn't that Blackstone? BX. Blackstone. Okay. Unfortunately, Miss Sarah, she's dropping. Let's zoom in a little tighter. Okay. Down, up, down. Not this week, kiddo. Sorry. Brendan, thank you for that. Ben, I will keep showing up. This is great. I need to continue learning. Dude, I'm here Sunday, Monday, Tuesday, Wednesday, and Thursday night, 9 p.m. Eastern Standard Time until about 11 o'clock. See, if I have over 200 people, I'll stay later on just one channel. It's my, what do you call it? Do you sell that has tripled? No. Repurchase another stock, the original stock again? No, not really. Clorox has good dividends for decades. I'm aware, but Clorox is a monthly. Masore, Clorox, CLX, CLX. Okay, Masore, check this out. July, August, September, October. That means I can only trade it once a month. That just doesn't work for me. Sorry. Do you have a class, a book of videos? Yes, Ben. You can go check everything out. It's in the bio. I try not to sell anything, so I'm not looking to sell anyone anything. We're all adults. We know how it works. Go to the bio. Before I forget, I got to say this every night because some people do get scammed. What do I mean by that? Now, I'm live streaming on 13 different platforms, which you will, not you might, you will be approached by someone saying that they are me. Either an email, a text, a WhatsApp, a Reddit, whatever those silly things are. I don't do that. You want to have a conversation with me, go to my website, book a call, or just leave your phone number. Whatever platform you're on, there is a bio which gives you detailed information about me and my company. Just send me your phone number. I will personally call you myself. Okay? Yes, Clorox. I love Clorox. I do, but it's not the right one. Okay, Corey, we already looked at Walmart earlier today. Mia, thank you. The Chart Babe, good evening. Quesadillo, are you a professor? No. Now, I always wanted to be a teacher. I just didn't want to do 7 years to get underpaid and underappreciated. Okay, Madeline, DM me your number. I'll give you a buzz. We'll chat. Is AI a bubble? Of course it is. It's a race. Only one person can win. Well, actually, maybe 2 or 3. Think about it. Okay? In the early 1900s, there was over 50 car companies. Now we have 4 or 5. That's it. Okay? Back in the 1800s, there were literally hundreds of companies making buggy whips and saddles. Not anymore. So AI is going to be basically the same thing. You're going to have the standard, and then it's going to be like computers. Like nowadays, we get 3 choices. We have Apple, IBM, what's that? Linux, something like that. That's it, 3 choices. How is the weekly cash flow taxed? Black Diamond, it's taxed however you want it to be taxed. Okay, now what do I mean by that? You got a choice. Pay taxes, don't pay taxes. Now, I'm not saying to do anything illegal or anything that gets you in trouble. You're worried about taxes? You need to talk to a tax strategist, someone who is professional at taxation and how to avoid taxes legally so you don't get in trouble. Do I have a class or book? Yes. Maud, please pin that. Clayton, I asked you like 3 or 4 times. What's your question? We already did Walmart. Clayton, please read. Okay, Clayton, you're not getting what I said. What I said earlier, if you put something in your comment that is inappropriate, it will not show up. And I'm terribly sorry if whatever you wrote is not showing up. You might want to rethink about what you wrote to see if it shows up. Certain words and phrases are just not allowed. Jay Moore, thank you for that. What do we have over here? It's not inappropriate. Yes, but I asked you 3 or 4 times to reinsert it. What happens when the price drops? That's the dumbest freaking question I've ever seen. Watch. Up, down, it went down. 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 Up, down. They do 2 things and only 2 things. They go up, they go down. What the hell were you thinking? Seriously, you think just because you buy it, it can't go down? They all go down. You just have to buy it at the right time. If you're not paying attention to your money, then you deserve to lose it. Terribly sorry. I'm unapologetic. I'm a Gen Xer. I really don't care about your feelings. I don't. But here's the thing. All right, let me get rid of this because I hate it when people do this. I do. My moderators are supposed to take care of this, so why am I doing it? Hold on. I still got some more for you. I ain't quite done yet. All right, where was it? Okay, so Clayton, back to what I was saying. All stocks go down. Okay? You buy it, it's almost guaranteed it's going to go down. You buy it, it's almost guaranteed it's going to go up. It's a 50-50 shot. Stocks go up, stocks go down. They are all going to go down. That's why we have rule number 1 and rule number 2. Rule number 1 is simple. Never, ever, ever, ever buy anything you do not want to hold long term, regardless of what it's going to do. If it goes down, oh well, it goes down. If it goes up, oh well, it went up. That's all they do. Do I hold? Of course. Rule number 2 is never sell at a loss. You can't tell me every one of your trades win in week 1. No, and I never did say that. And you're right. I could tell you that, but that would be lying, and I'm too old to remember all the lies, so I just don't do it anymore. I'll tell you straight up. Every once in a while, something drops. Every once in a while, something goes up. I'm looking at stocks as a long-term investment. If I like the company, fine, I'll put money in it. If it goes up, great, I will sell it. But every single stock that I buy will give me some income every single week. Whether it's 1%, 4%, 8%, 0.5%, a 1/4%, 2 pennies, I don't care. Every single position I have gives me something every single week. It just so happens, you add it all up, it averages to 1.4% on a weekly basis for me. Okay, and you're absolutely right. And I never did say everything goes up. Joe Renzo, thank you for that, Joe. Read my recent comment. I read them. Okay, thank you. Oh, Stock Mo's up. Oh, I love Stock Mo. TSM, we already looked at Taiwan Semiconductors. Cam, how about Altria? Okay, aren't we just about done for the evening? I think we are. Altria. Ooh, look at that. That's nice right there. Down, up, down, up. Oh, I want to take a look at this one tomorrow. I'm going to write this one down for tomorrow. All right, what else do we got? Thank you there, Joe. Yep, I read that one. Clayton, if you collect 1% premium, the stock drops 5% week 1. You can't collect 1% on that in week 2. Why not? Okay, Clayton, you're missing something. You really are missing something. Okay? Now, Clayton, I'm going to say this as slow as possible so you can follow along. And I'm even going to do, what's this, right here. All right, Clayton, are you ready? All right, you see that, Clayton? Stocks, options, dividends. You're mixing apples and oranges. Well, I want to throw in apples, oranges, and bananas. Okay? Stocks are one thing, dividends are another thing, and stock options are another thing. All right? So, Clayton, you ready? Let's get rid of all this. So let's just go simply. Stock, option, dividend. Okay, so if I buy the stock for $100, right? 1% of $100 is going to be on the option 1% per week. On the option, not the stock. The stock could drop down to $50, and I still want to get $1, which is still 1%. Okay? You have what is called ITM, ATM, and OTM. And that stands for stock options that are in the money, at the money, and out of the money. So for the most part, what I do is I do in the money and at the money. When the stock drops, I do out of the money. I don't care how small it is, I still want to collect something. So even as the stocks go up and down, I'm still entitled okay? I'm still entitled to sell an option against my stock. Whether it's an in the money option, an out of the money option, or an at the money option. I always ask myself 5 questions. What did I buy? What did I sell? Where is it right now? Where does it look like it's going? And what do I do next? The first 4 questions are easy because what you pay for something will never, ever, 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 ever change. Yeah, dude, I don't understand this. I really don't. Clayton, if I buy 1,000 shares, okay, at $100, right? 1,000 shares at $100, right? That gives me the ability to sell 10 contracts, okay? If the stock drops down to $25, I don't really care. I still have the ability to sell 10 contracts. There's a huge difference between a stock and a contract. Dividend, option, contracts. Wait a minute. Stocks, dividend, contracts, options. I can still, and you never, ever, ever, ever lose unless you agree to sell it for less than what you paid for it. Clayton, it's a conscious decision. You buy something, if it drops and you sell it for less, that's a you thing. If I buy a stock and it drops, I absolutely 100% refuse to sell it for less than I paid for it. And I don't care how much it drops.
Can you hear me?
I can hear you.
So if you buy 100 shares at $100, okay, and you sell an in-the-money contract and you make 1% on that contract.
Correct.
Premium.
Correct.
Okay. But over that week, you do this on Monday, and throughout that week, the stock price drops, let's say 5 or 10%. Okay, so it's a $100 stock, it drops down to $90 a share.
Okay.
In order to make 1% on a contract in week 2, you can't sell. Okay, you can sell a contract that's in the money at $90, right? You get your 1% guaranteed. But during that week, let's say the stock price goes up to 95. Okay, now you've made 1% on each of your contracts, but you've lost 5% on your stocks.
Wait. Time out. Did I sell my stocks at a loss or did the value go down?
The value went down.
Okay, wait a minute. The value went down, but did I lose money?
Well, you bought at 100.
No. That's what's called. Wait a minute. I hear what you're saying.
$5 a share.
No. I hear what you're saying, but you're not listening to what I'm saying. The value of the 100 shares went down by 5%. I still own them. I never ever lose until I agree to sell them for less than I paid for them. I can buy them at $100 and they can drop down to 3 cents. If I refuse to sell at 3 cents, I still own the 100 shares. It's never ever lost until you agree to take the loss.
Okay, let me ask a question.
Go ahead.
How do I prevent that $90 contract that I sold from being exercised now that the stock price is at 95?
You set an alert. So if the stock hits a certain number, you get an email, a text, or a notification on your computer. That's 3 opportunities to fix that mess. Because the stocks move every single day. It is
okay,
yours.
Are you hinting at I need to buy a contract at 95 towards the end of the week?
No, I don't buy options. I only sell.
Okay. I get how alerts work, but I have a contract that I have sold for someone to purchase those 100 shares that I own at $90.
Okay.
Stock price is at 95.
Wait a second. There's 5 days in the week. What day are you selling your 90 at? Is it Monday, Tuesday, or Wednesday? Monday?
On Monday.
Okay, so you're saying on Tuesday it jumps up to 95, right?
No, I'm saying on Friday it's at 95.
Okay, so I have 5 days for me to look at my position and see. Remember the 5 questions I asked? What did I buy? I bought it at 100. What did I sell? I sold the 90s. Where is it at now? It's at 95. Where does it look like it's going? Does it look like it's going up or does it look like it's going down?
Let's say it looks like it's going up.
Okay, great. Question number 5. What do I do? You roll it forward or you push it up, you push it down. There's always a way to get out of it. The absolute last resort is to sell at a loss, and I refuse to sell anything for less than I paid for it.
Okay, I understand it's past your normal time to stop. I'm curious though. I don't understand rolling it forward or pushing it up, but I would assume both of those cost money.
No, actually they don't. I will never throw money at a stock. If a stock goes up and I have to push it forward, I will push it either a couple of weeks out, a couple of months out, or I will decrease the strike price. There's always something that I can do to avoid taking a loss.
Okay, so that makes sense. If I could push the contract out, the expiration of the contract out a month, and that doesn't cost me any extra money, I'm still in a contract that it has a strike price of $90. I need the price of the stock to go up to 100, and then let that contract expire. That makes sense, but I'm still in a situation where now in week 3 I can't do anything. Right?
No, wait a minute. Wait a second. Hold on. Do you see what I pulled up here on screen? Yep. All right, what I'm going to do, I'm going to open up a little bit more so you can see a little bit more of these numbers. Okay, now, the line between the purple and the black, that line right there, is called, it's called at the money. Okay, the purple is in the money, and the black is out of the money. Okay, so the current price here is $4.27. So $4.27 is at the money, and that's paying for, let me get this out of the way. Okay, it's at the money right now, and that's $15.55. I need my calculator. Give me 1 second. Okay, so if the profit here is $15.55, and that's for 3 days, let's do $15.55, and we're going to divide it by the purchase price, which would be at this moment $427.28. $427.78 for 3 days. It's giving me 3. Do you see it? 3.6%. Okay. So I didn't make my 1%. I made 3.6. Okay. So hypothetically, let's get rid of this right there. Hypothetically, the stock drops by 10%. So 10% of 427 is 42. That would bring me down to 380, which would be 4 or 5 strikes out of the money. So out of the money right here, OTM, so 5 strikes out of the money, and it's now giving me $9.50. So out of the money, how far down can I go with this company? Okay. Hold on. Don't go anywhere. Shit, right there. All right. Okay. So this company here, at the money's right there. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. I can go 22 strike prices out of the money and still make a profit. Because if I own the shares, regardless of what price the shares are, if I never ever sell at a loss, it can drop to 50, it can drop to 40, it can drop to 30. I'm always going to keep an eye on the 5. What did I buy? I bought it at 100. What did I sell? I sold the 50s. Where is it at now? It's at 48. It's getting closer to 50. Where does it look like it's going? It's going up, it's going down. What do I do next? That one question, what do I do next? I want to not lose, and I want money to come in. Now, I may get 1%, I may not get 1%. We have no control over what the stock market does. We only have control over how we react to it. So if the stock price drops, great. But I never ever lose until I agree consciously to take less for it than what I paid for it. Now, for me, I would never do that. Because number one rule is never buy anything you do not want to hold on to long term or you do not understand. Now, when I say understand, you should know what the 52-week high is, what the 52-week low is, what the earnings per share are. Is it consistently profitable? What's the dividend yield? You're putting your money on the line. You need to do research on all your positions.
Yeah, no, I mean, I'm following you. I've been trading for almost 20 years. I just haven't been trading options for that long. And I didn't realize how you can roll for a credit. So I'll have to do some more research on that. It makes a lot of sense. I feel like there's situations where you could get in a position where you can't roll for a credit, a big enough credit to make 1%, but
wait, hold on a second.
Stocks,
yeah,
like you said.
I hear what you're saying, but remember, you're not going to get 1% on every single trade. The one I just showed you was like 4 or 5%. Well, great. You do a couple at 4 or 5%. You do 2 or 3 of them at 1/4%. It averages out to 1.5.
Yeah, that makes sense. I mean, we're looking at a $427 stock, and correct me if I'm wrong, but one of your rules is to not trade stocks over $300.
It was the quickest one I could pull up.
Yeah, but you can have 20 strike prices that are in profit on a $400 stock. You're not going to have that on a $40 stock.
All right, well, let's pick up SMR. What's SMR doing? All right, so SMR, that's 3 days. I don't want to look at 3 days. I want to look at next week, which is, there we go, SMR. It's a $10 stock, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 strikes out of the money on a $10 stock.
Yeah.
So pick a good company. Back to rule number one.
Yeah.
Back to rule number one.
That's why rule number one is rule number one. If you get in a quality company, you shouldn't be in this situation for very long if you do happen to get in this situation.
Exactly. And what's the worst case scenario if the stock drops?
You just hold and wait, and then you get paid dividends, and that helps count towards your 1%.
And if you chose right, it's a company that's increasing its dividends every single year. So even if the stock drops, the dividends are increasing year after year after year. That's why I like picking just the companies that are consistently profitable. Because if they're consistently profitable, worst case scenario, I can write something on it and collect something with the option premiums, but I'm always going to be able to get the increasing dividends. And before you came here, you probably never even knew that you could get weekly cash flow from a stock.
No, I mean, I did, but not this strategy. I really appreciate what you're doing here, man. I appreciate your time. This is good stuff. I'll continue to be a follower of you.
Oh, hell no. I get your number now. I'm going to send you a bill.
Hey, don't be like the other guys, man. Don't be like the other guys.
Wait. What do you mean by don't be like the other guys?
Oh, everybody's trying to teach something that's crap for a whole bunch of money, and you're actually spitting something that's great. And being open and honest and willing to teach people on a free platform. That's pretty awesome.
Yeah, but am I asking you to buy anything?
No.
Have I asked anyone tonight to buy anything?
That's what I'm saying. Don't be like the other guys.
I'm not.
You got an awesome thing going here. The
Thank you.
platform pays you. I appreciate what you're doing.
Wait. All right, hold up. Last night I made 2 cents on one channel and 5 cents on the other. Okay?
Gotcha.
So I'm not doing this for the money. I'm doing this to create a video log for my children and my grandchildren, because when I'm gone 20, 30 years, this information is still going to be valid. Stock market's been around for over 400 years. Options have been around since the 1970s. They're not going anywhere. The understanding and how to do it, that could be priceless. So before my children can inherit any of the money that I'm going to leave behind, they have to prove to the executor that they know what they're doing. So now they have the videos and they get to hang out with Papa G until they figure it out.
Heck yeah, man. Hey, I appreciate you staying an extra 30 minutes online to help explain it to me.
Hell, man, I'm sending you a bill.
I'll send it.
Yeah, triplicate form, yeah. All right, you guys have a great night. I'm done for the night. Hope that all worked out for you. We'll be back tomorrow night, 9 p.m. Eastern Standard Time. Thank you for your input, and thank you for staying calm, and thank you for letting me get my point across. Thank you there, Mr. Phil. You guys have a great night. We'll do this all over again, and I need my mood music. Mood music, where are you? Where are you? There it is, and there it is, and here we go. Oh, come on. Wrong button. Hit the wrong button. There you go. All right. Have a nice night, everyone. The heart that I'm giving, no matter the pain, building your legacy through love and rain.